First Republic Bank customers have withdrawn more than $100 billion, £80 billion, from their accounts in the first 3 months of the year, amid growing concerns about the health of the global banking system. This is Slant News TV. Please subscribe it. The US bank has reported a 40% decline in deposits since the end of December, following a series of bank collapses that have raised fears of a crisis in the sector. Swiss banking giant Credit Suisse also recently revealed the scale of a bank run that triggered its state-backed rescue last month. The closure of several banks in March caused unprecedented deposit outflows, according to First Republic's chief financial officer, Neal Holland. "We are working to restructure our balance sheet and reduce our expenses and borrowings. We also plan to cut costs by shedding 20% to 25% of our workforce in the coming months." Shares in the bank fell by more than 20% in extended trading in New York after the announcement. Last month, a group of major U.S. banks injected $30 billion into First Republic, which had been seen as at risk of failure. U.S. regulators called the move most welcome, while the banks, led by J.P. Morgan and Citigroup, said the action reflected their confidence. Problems in the banking sector surfaced in the U.S. earlier last month when Silicon Valley Bank collapsed, followed 2 days later by the failure of New York's Signature Bank. Authorities stepped in to guarantee deposits beyond typical limits in an effort to head off further runs on bank deposits. The situation has raised questions about the health of other banks. Central banks around the world, including the US Federal Reserve and the Bank of England, have sharply increased interest rates as they try to curb inflation. This has hurt the values of the large portfolios of bonds bought by banks when rates were lower. The collapse of Silicon Valley Bank has been attributed to this situation. The situation remains uncertain, and concerns about the health of the global banking system continue to grow.